I'm going to hit go live on to connect Facebook, and then we're going to be off, guys. All right, perfect. So now we are also live in the personal Zoom room, and we're also live on Facebook for those that are coming in through there. So welcome, everybody. We have a very, very important one today. Incredibly important one because it's very time relevant. There's some things that you're going to have to do now, or else you will not be able to write them off on your taxes come 2024, which you're not going to start working on till February, till March, till April. But if you don't do some things now, you're going to lose it. You're not going to be able to retroactively do it. So we're going to go over those important things, and give me a thumbs up or write in the comments yes if you can see my screen to make sure, because I'm connecting it through Facebook and everywhere. Good to go. Cool. Thank you. Appreciate it. So yeah, today we're going to talk about don't pay the IRS. The biggest business tax write-offs in 2024 that you can do for your business. These are the ones that I do too. Okay. So whenever you guys know how I do things, it's a show, not tell kind of thing. It's not theory. These are the things that I do. So we're going to go over all of these today. So this training will save you tens of thousands of dollars, no joke. So I have a good 100, 200 grand in write-offs and in credits. Some of them will be applicable to you. Some of them might not be applicable for you right at this moment in time, but they will in the future. So it just depends on where you're at and everything that goes on. So it's going to be specific to you. We will have time. I'm going to get through this stuff. We will have time for Q&A at the end of it. If you have questions in the meantime, as I'm going through it, feel free to type it in the chat. Feel free to unmute yourself too. But if there's things that you want to wait to the end, we'll have that as well. And I have a very time-sensitive bonus for you guys too that I'll explain when I finish up with the major part of this. That'll give you a massive ROI. It's kind of a one-time only thing that's going to be happening, but stick around for that one. We're going to get right through this, get right to the meat of it. Normally on these Gym Owner Freedom lives is we're teaching about kind of step one, which is making big, sexy profits in your business, right? Leading with price to win the game makes everything else easier or unnecessary. Then it's really about dual lead flow, making sure you have your paid strategy, making sure you have your organic strategy. And then the rest is fairly simple. It's build a team, right, of everybody moving the same direction and have them run very simple systems. Simple is the only thing that scales well, that maintains well. And then what you can do is enjoy profits, and you can decide how much you want to work in your business versus not. And I'd like to see everybody in a location making at least 150 to 300K if you own a brick and mortar gym per year per location. But the profits are very, 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 very important. But that's not the end game of it. Okay. There's a lot of people who make great profits and have no idea what to do with it. And unfortunately, we're left always kind of having a little bit of anxiety with our business, our retirement. Are things going to work out in the end? Are they not going to work out in the end? And you have to have a very solid plan to take the profits of your business and turn that into indestructible wealth. And when you do really good at that, you will have enough passive mailbox money coming in that can sustain your lifestyle, and you are financially free. Then you can work because you want to, not because you have to. You can choose to go on and start a second location or branch off and get into a different business or the next phase of your career, whatever you want to do. But the bottom line, maybe you want to work full-time in your gym. That's fine too. But when you don't have to worry about money every month, every quarter, every year, you don't have to worry about how long you live and if you'll have enough to get you through the end of life. Like, that is when, if we can solve that problem, I can't tell you what kind of peace of mind that gives me. And so that's the greater framework on here. So we're focusing on number 2 today. When you take the profits of your gym, turn it into indestructible wealth, that's where this comes into play. So we're going to focus on the middle right here, killing your tax bill. Most people just don't know the tips and tricks of this. You can write off so damn much, but your CPAs won't bring all that to the table. You have to learn this stuff for yourself. I had to learn this stuff for myself. I had to bring it to my CPA. I had to insist on it. I had to research it and dive in and hand it to her. And then she started doing it. And that's how most of it is for you guys too. I recently spoke on stage about turning the profits of your gym into indestructible wealth in Chicago at the 2024 Growth Summit. I had an absolute blast. Shirley, I saw you there, right? I had some conversations with a few of you. I think I saw Peyton and Lane on here, but we were having the day before I went on stage, we were having a conversation, and you had some questions about some of the tax returns and what to write off, what you can't do. And after we had a brief conversation, I just straight up said on stage, I go, you need to fire your CPA because you were aware of certain things that could be done, but your CPA was pushing back on all of them. Now, sometimes reasonably so, but sometimes there's just a really easy loophole that they're just not doing. And sometimes they just don't want to do it. And there was another bookkeeper there, an accountant, Erica. And I was chatting with her and I asked her, hey, why do so many CPAs suck? Why do they just not care? And she's one of them. She's like, because they're getting paid either way. The bottom line is the more work they do for you, the more time it takes, right? The more hassle it is, the more documentation they're going to have to show, the more, if you get, for whatever reason, people get randomly audited, there's going to be more work on that end if that happens, right? But here's the thing, guys. The tax code is the tax code. Neither you nor I wrote that thing. And if the law says you get to write off X, Y, and Z, you better be damn sure you're writing off X, Y, and Z. Otherwise, it's just irresponsible. And most CPAs are getting paid no matter what. Most of them are not going to bring all these loopholes to the table to you. And it's either because they don't know or they don't care. And I don't know which it is. But at the end of the day, you cannot abdicate your financial education to your accountant. You have to learn this stuff. You have to say, hey, I know about this. It's section 179. I think it can apply to this. What do you think? Right? Can you do this for me? Yes. Okay. I recently acquired a business last year, Castillo Armory, part of a business, right? He needed expansion, needed to grow. We bought a $1.5 million building to expand production, move into there. And as we were going through things, I noticed he was paying himself like $120,000 salary, which nothing wrong with what he's paying himself. The business is profitable. But the problem is that all came from W-2. He was being taxed as an S Corp, as an LLC, and he was paying himself on that a W-2 salary, which is a complete waste. At the end of the day, the whole reason to be an S Corp is the fact that you take a small salary, you take the rest in distributions, and you save 15.3% taxes on Medicare and FICA. So he could have paid himself a $40,000 salary and saved 15.3% on $80,000, which I don't have a calculator in front of me right now. And if anybody does, do this math. Wait, I can bring it up on my computer here. You guys can't see it. But $80,000 times 0.153 is $12,240 that he was donating to the IRS. And since we're partners, I'm like, hey, we'll get the CPA on. We'll talk about it. And so I asked him, are you comfortable with this? And he's like, well, yes, of course. That's the whole reason of being taxed as an S Corp, is so you don't have to pay all that. And then I'm like, well, what the fuck are you doing then? Pardon my French, guys, but like, you are the CPA, right? You know this stuff. You chose not to tell Sam this for years. And at this point, he's given 60 grand over the IRS. I mean, we fired him, of course, but it's ridiculous. This stuff is so prevalent. I see it all over the place. So I'm here to bring you the information, okay? Then you can take it to your accountant, your CPA. So note, I am not an accountant or a registered tax professional, okay? So take my advice, but work with your qualified professional to make these tax decisions, okay? I'm aggressive with taxes. I'm not going to do anything that's going to land me in jail. That's for damn sure. So, but you need to work with somebody who's going to take advantage of every piece of the tax code for you, because it is ugly. Income tax was there briefly in the Civil War. right? To try to get the Americans through the Civil War and pay for it. Then it went away. It came back in 1913 with the 16th Amendment. Okay. At that point, when it was introduced, it's estimated that less than 1% of the population actually had to pay income tax. Okay. Not many at all. Can anybody guess what the tax bracket is? Right? There's a range between how much you earn. 99% of people did not even pay. Only 1% did. Do you know what the range was from the low end to the mid end, high end? Throw it in the chat. Let me see these guesses. Some of you may have been on a training with me before. You may know the answer. Any guesses? Nobody wants to look stupid, though. 100? Nope. It was 1 to 7% was the tax rate. Right? Now the top tax bracket is, for federal income tax alone, is 37% plus 15.3 FICA and Medicare plus state income tax. Wayne, you're in California. Top tier, 12.3% on top of that. Are you guys doing this math? Holy shit. That's a lot. And you're already paying taxes on your real estate, right? You're paying rental tax. You are paying it on your cable bill. You are paying it on your phone bill. Every time you stay in a hotel, you're paying it. Every time you buy groceries, you're paying it. Yeah, barf emoji. Exactly. It's absurd, guys. It's so bad. It's so bloated how big it has become. This is not what our Constitution was founded on. It wasn't supposed to be this giant ass thing with the government involved in every aspect of your life. It's kind of become an abomination. And the reason I'm sharing this with you is because the way the government spends, it's one thing if it's all going to good stuff, but holy cow. I mean, you guys know, I don't care what side of the political spectrum you are on, but it's pretty bad. And small business owners, we work our ass off. We take massive risks. It is your duty, it is your responsibility to take advantage of every single tax break and deduction that is available to you by law. The problem is that it's complicated. So I'm going to clarify a lot of these things for you today. Questions, bring those in, right? We'll have time for it afterwards. Still wrapping your head around paying property taxes with post-tax dollars. Yeah. It's ridiculous that taxes, we pay taxes when we make the money and when we spend the money both. It's ridiculous. Tax on top of tax on top of tax. It's infinite. It's the biggest scam ever. The older I get, the more of a libertarian I become. That's for damn sure. But okay, so let's get into it. So number one, most of you have LLCs, almost all of you. If you are an LLC, you can elect to be taxed as an S Corp. Okay. Being taxed as an S Corp means you're going to pay yourself a W-2 salary as an employee. Okay. You want this to be as low as possible. So when I put in these estimated savings in green, I'm saying, hey, this is a studio that's maybe making $200,000 in profit. Okay. You might only be making 100 or less, or maybe you're making more than the 200. That's okay. But I'm just kind of giving you a ballpark on what you might be able to save in your taxes or deduct in your taxes. Sound fair? So when you get elected as an S Corp, you're paying yourself a W-2. So let's say all in all, you make 200 grand profit. Pay yourself a salary of like 36 grand, 40 grand a year. The rest of that money is not going to be subjected to self-employment taxes, which is, since we're small business owners, 15.3%. If you go and get a job and work for a corporation, they're going to chip in half of that, and that comes off of your paycheck, right? And then you're responsible for the other half of that. When you're self-employed, you're responsible for the whole damn 15.3% for Medicare and FICA. But if you pay yourself as small a salary as possible, it's only on that. The rest you take is distributions, and you save 15.3%. Okay? Some of you, your accountants, are not doing that. Like the one I just mentioned, the one that I acquired, and the owner operator was paying himself 120 grand on W-2, which is flat out irresponsible. Hence why we fired that CPA. That is, everybody knows that. That's like Sesame Street for an accountant, right? So that's a big one. Not all of you should do it. If you're not that profitable right now, you don't necessarily have to do it. But for almost all of you, it makes sense to do it. Almost all of you. There's the Trump tax cut that was done a few years ago. There's a 20% reduction on the taxable income through pass-through entities, LLCs, partnerships, sole proprietorships. So that's a lot. That's a lot. Now, so let's say your whole taxable income is $200,000. You can reduce, and I take the salary out of that, right? Because that's an expense now that you're being taxed as an S corp. And you take the remainder of that, 20% of that you do not have to pay taxes on. That's pretty awesome. That could be a $30,000 deduction. Almost all of you would qualify for that. Okay. That is set to expire at the end of 2025, though, unless it gets renewed. That's probably heavily dependent on who gets elected. But as of right now, that's going to sunset at the end of next year, unless legislation renews that. Okay. The Augusta rule. Anybody know about that? And good. I see your comments coming up here. LLC, S corp. So yeah, an LLC, you don't have to change what entity you have. You can be taxed as, hey, like a sole proprietorship or a partnership by default. That's how it is. Or you can just change your tax election. You don't have to do anything with the entity and just say, hey, I'm going to be taxed as an S corp now. So you can do that at any time. You don't have to switch entities or anything like that. Your accountant said 50-50, the one I fired. There you go. What percentage of your pay should be salary versus distribution? Talk with your CPA about it and what they're cool with. And, well, not what they're cool with. You make sure you're cool with it and they're cool with it. I go pretty aggressive with it. I can argue that I work part-time in my business. I mean, it's pretty, with my business. So I go pretty aggressive with it, and it depends on how everything's set up. But, at the end of the day, small business is tough right now. Gyms are tough right now. It supports a smaller salary. No doubt about it. Yep. Your CPA said the salary needs to be reasonable, which is gray area. Absolutely. How much income would make sense to do as an S corp? Good question. I believe it's like 40-50 grand you need to be kind of like making before it makes sense, around there roughly. But again, tax situations are very unique. Who else are you married? Are you not married? Right? What other things do you have going on this year for your taxes versus not? Did you install solar on your roof? So the taxes are how they all fit in together, if that makes sense. And that's why you want to work with your CPA to do all this stuff, but you got to bring all this shit to their desk. 1000%. Okay. The Augusta rule. So this is where, let's say you hold a meeting with your staff, or you're using your house for a barbecue and having clients over, whatever it is. Okay. You can personally deduct the home use of your house. You can have your business rent your house, okay, for meetings. So this is where deadlines apply, because in order to qualify, you can't just slap it on your 2024 returns when you start doing them in March. Okay. You have to create a money transfer and have documentation this year to do it. So my house, it's got to be fair market value and all that kind of stuff. If I rented an Airbnb to have staff meetings over here, Josh, right, you've flown out to my house and we're all in my office doing stuff, right, for a few days. I'm cutting a check from the business to me personally for the rental of my home during that time. Okay. I think I put mine at $1,000 a day or something like that. Okay. So I'm assuming your house might not be as big or as expensive as mine. It could be bigger and more expensive. I use like, hey, at a $7,000 deduction, you can deduct up to 14 days. So I said, hey, $500 for the house, for the use of your house, times 14 days max, 7,000 deduction right there. If you have a bigger, more expensive house, sure, $1,000 a day, 14 grand deduction right there. But you need to create those, write yourself a check on them, put the dates on there, and then kind of have, hey, here's the agenda, here's the dates, here's the agenda of what we covered in those days.
Hey, Scott, is there a max on the Augusta rule dollar amount? I know you can't go crazy. I just know it's a 14-day cap, but is there a max on the amount?
Nope. No max on the amount. It's just got to be reasonable, kind of market value, right? So if you don't own Mar-a-Lago, you can't give yourself Mar-a-Lago rental rates. Put it that way, right? But there's no cap on the dollar amount. It's gotta match up and be legit. But that's one that you have to do now. If you try to do that, you can't create that paper trail, right? You have to move that money this year. Okay, so that is very important. Make sure to write that down. Automobiles, a lot of confusion on this one. This is where I've seen CPAs push back on too. Why? Because technically, commuting to your gym and back is not allowed. Commuting to your place of business. So I have seen some people flat out say, no, you can't deduct those. I don't know if Taylor, you're on. I think your CPA did that. But here's the thing with it. Peyton, was that you too? I think we were talking about that at the Growth Summit. I can't remember.
Yeah, kind of, but I don't have an office at my gym.
Yeah.
So that was
there's the
workaround.
loophole. There's the loophole, guys. And it's fine if you have an office at the gym. I don't care. Here's the loophole. Because commuting to your place of business and back does not count for business mileage for whatever weird ass reason. So a lot of your CPAs are going to push back on it. The loophole is if you have multiple offices or places of business, commuting to and from them is good to go. So what you need to have is a home office. Home office needs to be a dedicated space, and we'll get to that in the next slide, I believe. But if you have a home office, now you're just going from place of business to place of business, and this is a good to go. 2 ways you can write off your car. Number 1, standard mileage. You drove 6,000 business miles this year, multiply it by 65.5 cents. There you go. So if it's 10,000, you can write off 6,500 bucks, right? Or you can do it with actual expenses. I misspelled fuel. I'm not that dumb, but I caught that. Fuel, your tags, insurance, maintenance, okay? And then you depreciate the cost of the vehicle too. This is under section 179. And if you have a vehicle that has a gross vehicle weight rating of over 6,000 pounds, you can write off a shit ton in your first year. So you can write off currently, it's getting phased down a little bit over the years, and this is mainly for your heavier SUVs. If you're wondering if your car has that or your truck has that, open up the door. Okay, on the driver's side, there's going to be a label with GVWR on there. If it's over 6,000 pounds, it qualifies for bonus depreciation and this kind of stuff. You could write off $30,500 plus 60% of the remaining. So if you bought a new SUV at 80 grand, you can write off the $30,500 times 60 times the bonus. So rough math, I don't know, 60 some grand you can erase right now off of your taxes. You don't need to depreciate it that fast, right? So that's the whole thing. It's all about how your taxes work together. You might only need to take a fraction of that. Okay. I already told you about the loophole. So that's what it is for your automobiles. Okay. So you need the home office to be able to do the commuting, get around that loophole, right? So it needs to be a dedicated space in your house that is for business only. And you take the square footage of that room or space divided by the entire square footage of your home. And then you can average out, hey, what is the rent of your mortgage plus utilities plus all that stuff divided by that? What's that percentage of square footage? So I don't know. Mine's like 376 square feet in my home office. I divide that by like 5176, and that's my percentage. And then I multiply it by all those costs. And that's what I get to write off. Okay. So make sure you're taking advantage of that one as well. Health savings account. Okay. So health savings accounts are super easy. Really every healthcare plan qualifies for you to get an HSA. So HSAs are a big tax loophole and an investing loophole, actually. What it is, it's like a savings account for health-related expenses. And if you got a family, you can put in up to $8,300 a year. That does not get taxed. And when you use it for qualified medical expenses, it's never taxable. which is great. And if it's just you only, you can do up to $4,150. You can also, like, if you use the HSA account that I have set up, you can tie it to an investment account and have that thing grow tax-free forever, which is a really good hack. But I have some of it doing that, but I have 2 kids. And at the end of the day, with dental stuff that we pay for, with just doctor's visits or whatever, we usually spend that. So what I do is January, I will dump in $8,300. Okay. And then I just distribute it back to myself. Okay. Now you can do it where you put it on the card, and that's what you use all over the place for your medical and your medications and your doctor's appointments and you name it, dentist stuff. Or you can just reimburse yourself cash, which is what I do. So I dump it in there, and then the next day I just send it back. And I basically wash $8,300 of taxes. I think it's, I have to check in the thing that I'm building, but I think it's hsabank.com or .org or something like that. It takes you minutes to set it up. It's super easy. But that's a great tax hack that you can double for tax-free growth and investment. How do you send it back? I just log in there and I send it back. I get everything connected, right? My bank account's connected, and it's super easy. Do you pay yourself $8,300 in business? It can be business or personal account. Doesn't matter. Doesn't matter. But you deduct it on your personal stuff, which is even better. So it's even better. But that's a really good hack that not a lot of people know about. And if you just want to keep that money in there for your health stuff and savings and accumulating, you can tie it to an investment account and let that thing grow for years and decades. You can let it grow for years and decades and then reimburse yourself way later too. And it's all non-taxable, which is pretty amazing. Travel and vacations. You need a business reason, right? Work with your CPA on that. Document stuff. Shoot, next time in California for visiting, I'm going to make sure to get together with Wayne or Cecilia. I see you guys on here, right? There you go. Business trip, another business trip, taking the family to Carlsbad and talking shop. There you go. Find a business reason, guys. Find a business reason for travel, where you're staying. Health insurance. So make sure you're deducting your health insurance. You can absolutely do that too. I put $10,000. That's about what mine is, because wife and 2 kids, right? Yours is going to be different, but you can definitely have deductions there. Make sure you're doing that one. Your cell phone, your home internet, office supplies, computers, podcast equipment, you name it. Get creative. If you use it for business, chances are you can deduct it. Okay. So we know that stuff, but just make sure you're taking advantage of all of those. A way to keep all of this stuff really easy, guys, because it's so easy to lose receipts. You guys have receipts here, 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 here. Have a dedicated credit card that you use really just for business stuff. I don't have to keep track of receipts. The statements are there. We got to look something up. It's there. If I get audited, yeah, it's all there. Go look at it. It saves me a lot of time and hassle. And what you're just going to do, you're going to lose stuff. Period. Right? You're going to lose it. So just make sure you have a dedicated one for your credit card. And that's usually the best case. For whatever reason, if I don't have a business card on me, I left it, whatever, I'll just like cut myself a check personally. And that way it creates that transaction, and I know I'm not going to lose it. And yeah, thank you, Nancy. There's free apps for it, right? Fetch, Coin Out, Receipt Hog, all those kinds of things. I tend to go very basic. Listen, if the IRS wants to come knocking at my door for an audit and I'm missing something, all right, whatever. I'm not going to go crazy trying to get all this stuff together. But yeah, and always use credit cards for stuff. It's way easier if there's fraud, if you got to do a chargeback, collecting points, hacking points. I got like 1 million points. I flew my whole family to England and back and didn't even make a dent in it, right? So when you hack the credit card game, which we can have another training on that later, man, you get free vacations for a very long time. What I do, I actually use the points to do the trips, but I have my company write a check to me for use of those points too. So I take advantage of the write-offs, which is pretty cool. Anyways, meals out and in, right? Now, in 2024, during COVID, they let you write off 100% of that. It's only 50% deductible now. But take advantage of as many as you can. You know, they have to be business meals for whatever reasons, but take advantage of as many as you can, no doubt about it. Carly, yep, thank you for bringing those guys in. Supplements, clothing, shoes, get creative, guys, right? If you're in the gym, if you do stuff on video, on Instagram, on Facebook, on lives, on Zooms, your physical presence, right, has something to do with it. So the clothes that you buy, the shoes that you buy, all those kind of things, you should be able to deduct those. Check with your tax person. If you think they're too conservative, interview another tax person. But yeah, you should be able to do a lot of this. This is my wife's favorite tax loophole. The amount of spending she has on Lululemon and whatever all these other things are, I don't even know, is outrageous. We definitely deduct more than that $4,500. But at the end of the day, take advantage of everything you can here. And another one, if you guys have kids, okay, not everybody does, but you can hire your children. And the first $14,000 that you would pay them is tax-free, okay? Because that's the entirety of the standard deduction. So I've got 2 kids, right? I could pay them each $14,000, and that wipes out a $28,000 deduction, okay? So that's a pretty cool thing that you can do too. I actually then throw that into an infinite banking policy, which will then have them earn tax-free money for life. And I've divorced myself permanently from the IRS with something like that, which is amazing. But that's a really good one if you have kids and you have enough cash flow to make that happen. If you don't, it's okay. And you might not even need that write-off, and that's okay. I'm just giving you guys all the options. Same thing, renewable energy tax credits. All right, so these are pretty big. So I'm in Phoenix, Arizona. It's hot as hell. AC bills are pretty high. My home is about 5,200 square feet, so my AC bills could get ridiculous. No matter what, and it's sunny all the time. So no matter what, solar panels, it makes sense. Holy shit, does it just pay, right? But the cool thing is right now, you get 30% of that whole project cost you can write off. Or sorry, not write off, excuse me, way better. I put in here purple, credit. You get a tax credit. That does not mean that you get to deduct that. That means you get to act like that was paid on your behalf. So my whole system was 60 something thousand. I got the biggest system I could. Okay, because I'm going to be here. This is like our forever home, right? And it just made sense. Give me the biggest one we can. You know, it doesn't take us long to break even on that. And then we get free energy or pretty extremely low cost for decades, right? So the cost of my entire system was 60 something thousand. At the end of the day, I get to apply over $20,000 to my tax bill this year. That's massive. That's a credit. That's a tax credit. That is huge. So 30% of the total project cost. If your house needs a new roof, the cost, because you can't just put it on a crappy roof. Maybe it needs new underlayment or whatever. You get to roll the cost of that into the whole project too, which is pretty unbelievable. Now, don't go out and get solar on your house if it doesn't make sense, right? So the math has to work. You don't want to spend money just to get a tax credit necessarily, of course, right? But if it makes sense for you in your area, holy cow, that will exist next year too. This is not something you'll be able to take advantage of this year because it's not going to get installed in time with all the permits and all that stuff. It would be a next year thing for you. Okay. But that's massive. What could be this year? Electric vehicles and plug-in hybrids. So you can get up to $7,500 tax credit, not a deduction, a tax credit, which is pretty awesome. I thought it was just on new vehicles. That being said, I did the research, and if you buy one used, you can get $4,000, up to $4,000 if it qualifies, which is pretty damn cool. That's really cool. I don't have a fully electric. I've got a plug-in hybrid, the Jeep 4xe, which is pretty awesome. But those things add up. Those things really add up. Those credits are really big. So take advantage of those if it makes sense for you. And if it doesn't, it doesn't. Don't rush out and get a really expensive vehicle just to save money on taxes, is what I'm trying to say. Be smart with your money. Okay? Be smart with your money. If it fits in, great. If it doesn't, these ones aren't for you. All right. Of course, common sense, but we don't think of it like this, guys. Investing in yourself, investing in your business. Okay? This will wildly vary person to person, but you are the number one asset. Your education, your network, who you're learning from, who you're spending time with, the direct things you're learning, but then also through osmosis, when you get around high achievers, it's going to push you further, right? Any investments in yourself and your business are deductible. So books, courses, mentors, coaches, masterminds, okay? All are 100% deductible. If you're having a better than expected average year this year and you need to write off more, contact anybody you're working with. But hey, can I pay in full for the rest of the year? If you've got the cash flow, right? But don't forget, like, these investments in yourself and your business are all tax deductible. All tax deductible. But the cool thing is your ROI working with these things are going to be massive. We're all products of coaching to some degree. The most successful ones that I'm seeing in here are the ones who have been working with coaches and mentors and masterminds or in networks. They go to events. That's it. Period. The highest achievers I know are in that space now and actively and always. I am, right? I am a coach and a mentor, but I also have them, and I will never stop having them. It's the number one thing that's got me to where I am today. So invest in yourself and your business, okay? But your other investments should also be tax advantaged. The order of investing is always this. Number one, invest in yourself. Nothing happens without you. You are the primary asset. You make everything in your life for you and your family happen. So invest in yourself first. Then invest in your own business or businesses, because you will get a higher return on that than anything else. Then the third thing is invest in other cash flowing assets. Okay. Invest in other cash flowing assets that will make you more money. This can be real estate. This can be private lending, right? Hard money loans. This could be buying other businesses, right? Whether you run them or, like I am, kind of passively investing, just using my knowledge to help them way better, like help them really blow up. That's what I'm doing. But all of these things can be tax advantaged and really put yourself in a good situation. One thing that you guys know I do a lot of is creating my own bank. So I take the profits of my business. I first put it in a high yield savings account, and then I put it in an infinite banking policy where it earns 6% tax-free forever. And then I use that same money to invest in real estate or other businesses. So I'm earning double returns over decades. And the money that I throw in here, it's tax-free for life. I divorce myself from the IRS forever. The money that I have in there that grows at 6% is tax-free forever. When I take it out, anytime, now, in 10 years, in 30 years, it doesn't matter. And so I've created my own personal bank that I make money on my own money, and it is tax-free forever. It's what the top 1% of wealthiest families do. This training, I'm not going to get into the weeds on that one. It's a little bit beyond this, but I'll show you how you can learn more about that stuff too. Same thing, real estate. I'm big on real estate. I'm big on other businesses. You know, some of it you can see in there short-term, commercial, right? Commercial real estate, I've got different places. I also have long-term residential in the bottom right. That just brings me money when I'm sleeping. The other ones in the upper left, I have vacation homes, short-term rentals that we use as our private vacation homes, but that also make us money because they're on Airbnb with a property manager. The cool thing about all that cash flow I make from real estate, which is pretty substantial, that gets deferred because I depreciate these assets against that income, and I'm not going to owe money on that for a very, 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 very long time. And if I buy and sell real estate, I'm going to do the tax tricks like a 1031 exchange. So I do not pay taxes on the capital gains on those properties. I'm going to sell it. I'm going to buy another cash flowing real estate property. and I'm going to defer those taxes, and I'm going to do it basically forever. So I don't pay taxes on it. So again, your investments should also provide tax shelters. Now wanted to get to this bonus that you guys can take advantage of too. That'll give you at least a 500% ROI conservatively, which sounds ridiculous, but step 2, making the money. Okay, making the money in your business is step 1. Turning that money into indestructible wealth is step 2. There's a lot of steps in here. Today, we're talking about this middle step, killing your tax bill, right? Tax strategy, investment planning, right? Doing those things. There's a lot that you also have to do in order to keep the cycle going. And so it's kind of what I had mentioned. Take your business profits, throw that into a high yield savings account, put that in your own personal bank, earning 6%, divorcing yourself from the IRS, and then investing that same money when you find good investments and buying cash flowing assets, which will increase your profits. And you keep that cycle going a few turns. And the whole thing is making sure you're paying as little to no income tax as possible. You are going to pay some, right? No doubt about it. But you can pay a fraction when you know the ins and outs on these things. And when your investment strategy is aligned with it. That is where the magic really happens. Taxes are your biggest expense in life. They are. They're going to trump everything. We went over it. Income tax, the federal, FICA, Medicare, state, real estate, rental, use tax, transaction privilege tax, sales tax, taxes on your Netflix account, taxes on your cable bill, taxes on your phone bill, taxes on the gas that you pay, on top of the sales tax. It's infinite, guys. You need to reduce that as much as possible. It will explode your wealth. It's what's going to help you live that profit lifestyle. These things need to be tax advantaged. I can't create that. I can't emphasize that enough. And so one thing I'm doing when we talk about making the money and then turning it into indestructible wealth, I'm going to be creating a massive course. It's going to take at least 16 weeks to build. More likely, it's probably going to be like 20 months. It is a lot. I've got a lot of it done. I've got a lot more to do because what I've learned over the past 15 years and making a lot of mistakes and learning it through it all and not trusting anybody. So doing all the research ranging from, yes, taxes, but to investing, whether it's stocks, bonds, real estate, you name it, building credit, hacking the credit score systems and the point systems and everything that involves in this kind of stuff and the compound math over 20, 30, 40, 50 years for retirement, it's going to take a long time to build, right? I've got a lot of it done, building it now. But it's going to have all the tools, all the calculators, all the systems you need. And it's, we're going to start by looking at a lifestyle budget. What's your current lifestyle? What's your bare ass minimum, right? If shit hit the fan and you got to shave expenses, where does that look like, right? And a comfortable lifestyle. And what's your ideal lifestyle, the profit lifestyle, right? Then we're going to figure out how much money can you save of your income to sweep into your investments to build indestructible wealth. Because when we can at least get it to cover your passive income, to cover your bare ass minimum expenses, you're financially free. It doesn't take that many years. If you're aggressive with it, it doesn't take that many years to do it on a cash flow basis. Okay. And then we know how much income you needed to make and to shift to make these things happen. And if you invested that for 5 years or 10 or 20, you see how much you're amassing in here and creating that. And we got to figure out what are those levels? What is that financial freedom for you to cover your bare ass minimum, to cover your comfortable lifestyle, right? And we're gonna go through all that together. We're gonna track your cash flows from your businesses, all that kind of stuff. We're gonna look at your debt. What do you want to pay down? What do you not want to pay down? Your investments or potential investments, whether you're doing whole life policies and infinite banking, whether you're doing short-term rentals, long-term rentals, your primary house, what is that going to look like and do for you in 10, 20, 30 years? Does anybody know what their primary house is going to be worth in 30 years? Probably not. What if you picked up a condo, 2-bedroom condo that you rent out, that maybe only cash flows you $200 or $300 a month? Do you have any idea how much money that's going to make you in 10, 20, 30 years? and what it's going to be worth, you need to know that. Because this stuff isn't hard. For you to be financially free and never have to worry about money, it's not that difficult when you know this stuff. Having a profit predictor to look at your business and understand where acquisition and churn are going to cancel each other out. And how do you overcome that to not only get to the revenue level you need to, but how you determine your expenses and your payouts and your payroll. Where does that put your net profit, right? If you have business loans, when those fall off, what does your net cash flow look like? So we're getting into all of that and establishing the lines of capital and credit so you can do things. You know what loans are going to cost you and how to finance and if something's a good deal or not. There's so much to learn and do in that one. And I'm building out this course, but this is a one-time thing that I'm going to do. And that's not a marketing thing, guys. I'm doing this once because it's so time intensive. Because this is going to be a course that everybody on the planet needs. If you're a small business owner, if you're an entrepreneur, if you're an investor, you need to know this stuff soup to nuts. It will save you at minimum hundreds of thousands of dollars, and more than likely for everybody on this call into the millions of dollars. No joke. And I can see on the list of all the participants on here, there's several who we've already had conversations that has easily saved them hundreds of thousands of dollars because they don't know what to do on the investment side. They don't know where the fees are from their Edward Jones advisors or this or that. That's going to cost them 600 grand. Taylor, shit, we looked at your infinite banking policy, $1 million difference that I showed you, minimum. That's nuts, right? So this is going to take a long time to build this course. But what I'm going to do is, for those of you who don't want to wait for this to do it, I'm making it a live coaching experience with me. So for the next 16 weeks, and I'm going to put an asterisk on that because I think this is probably going to go 20-ish weeks, actually, because there's so much. There is so much. But for the next 16 weeks minimum, you and I are going to be on these calls every Tuesday, learning and doing it. Not just sitting here with a boring lecture like we're doing now. You're going to get the tools. We're going to actively do it together. Now, don't worry. You do not have to share your finances with anybody, okay? Share as much as you want, but you are not required to, okay? Anything that I know, anything that you come to me personally with is 100% confidential. I will never share any information that you do not want me to share. But we're going to actively build all this shit out together. We are going to figure out how your business is doing, where your money should be going. Should it go down to pay down debt? Should it go into this investment? What is that investment strategy? What should I do with this money, that money? How do I do this? What do I need to do on my tax strategies exactly? So we're going to learn and do this over 16 weeks. This will become the course that you will then get and keep for a lifetime. But the advantage of doing this now is that it's going to be less than half the cost, and you're going to get guided with me over 16 weeks to do it with me. And it's going to include 2 one-on-one coaching calls with me. Okay. It's going to include 2 one-on-one coaching calls with me, which is why I can only do this once. I literally do not have time to do this forever. So it's never going to happen again. Not because I don't want to. I just can't spare that time. And so I'm going to copy this link for you here too. And I'm going to put this in the chat. And Josh, I might need your help to put it in the Facebook one if I can't get in there with this. But this starts next Tuesday. Now, if next Tuesday is too early for you, that's fine. All these calls will be recorded, and that's fine. We can catch up. But I'm going to start this October 15th. These calls are going to be at 10 a.m. Pacific Standard Time. We're going for at least 16 weeks. Okay. You're getting the entire course forever at the end of this. You're getting every single app. You're getting every single spreadsheet. You're getting every single thing. The 2 coaching calls with me. Okay. And this is the loose agenda of what we're following. Based on our conversations and Q&As and discussions, I know we're going to go beyond 16 weeks. Okay. But we are going to learn the money game. We're going to go over financial philosophy, dispelling common myths. We're going to learn how to create leverage and divorce yourself from always trading time for money. We're going to figure out what are your North Star numbers with your vision, calculating your financial independence markers. your bare ass minimum, your current, your comfortable, your profit lifestyle. We're going to figure out exactly what you need to sweep and invest to make that and how long it's going to take you to get there. We're going to take control of all of your shit. We're going to know exactly where you're at, income, expenses, cash flow, debt and payoff schedules, assets and liabilities, so you can make intelligent, sound financial decisions. We're going to create your cash flow system. So we'll set up your banking and your sweep accounts. For a lot of you, it's going to be with your infinite banking policies and creating your own personal bank to divorce yourself from the IRS. But we're going to set that stuff up. We're going to look at your debt. What is good debt that you want to take your time, sweet ass time paying down? What debt do we need to restructure or pay off early because it's sucking cash flow? Some of you have really big loans out there for business and otherwise. That's okay. I've seen it all. I've done it all. Sometimes we can move things around, take advantage of some hacks, and save you $1,600 a month on interest. No joke. That's why I started doing this, guys. I started working one-on-one with some of these business owners, and I'm like, holy shit. There is money bleeding out everywhere, and there's no structure to create indestructible wealth. And I didn't realize how many people needed this so badly. And just on taxes alone, are you kidding me? It's ridiculous. Like, we're just donating money to the IRS because we don't know any better, because we're relying on our advisors, our financial advisors, and we're relying on our CPAs, who frankly don't really give a shit that much because they're getting paid either way. They just don't. I am here to teach you how to fish for yourself. I'm not here to give you a fish so you can eat a meal. I'm going to teach you how to fish for yourself so you know how to do this for the rest of your life. So a lot of you are going to start your own bank and learn how to use your own bank. So how do you earn money in 2% in two different places over time? We're going to take a look at your business. Are there a couple places using the profit predictor where we can make one or two lever pulls to really increase that net profit? I like to see 30 to 50% net profit from a business. It's not always possible, but quite often it is. Quite often it is. Becoming bankable. So we're going to create your personal financial statement. If you need an SBA loan, a 504, if you want to buy the commercial building where your business is at, you're going to learn how to do that. My SBA 504 is at 1.67% for 30 years, or is it 25? I can't remember. It's ridiculous. So I'm going to learn how to get you financing so you can grow your business, so that you can take advantage of amazing investments, so you can buy cash flowing real estate, all that kind of stuff. We're going to learn to play the game. We're going to hack the credit score system. We can repair negative items on your credit history. We're going to hack the credit card point game so you can get the free vacations, all that kind of stuff. You're getting a 504 loan now? Hell yeah. Pain in the ass to get. Holy shit. But it is well worth it. Well worth it. Because I want to get you bankable. I want you to get qualified for any loans that you need to do what you need to do. And we're really going to hammer the tax code. Right? We're going to not pay that IRS. We're going to go in nitty gritty on that kind of stuff too. And we're going to start to map out your investment path. Is it stocks and bonds, index funds, stuff like that? Is it syndicates? Is it real estate? Is it private lending? Is it business expansion or business acquisitions? A lot of ways that you can invest. But what's right for you and what's right now versus what's later down the road for you? That might be ahead of some of you guys. That's okay. And for some of you, it's going to be right now. But what we're going to do is we're going to do this shit together over at least 16 weeks. We're going to crush it. You're going to have a game plan. You're going to start to build indestructible wealth. This will become the course that people can just buy later. It's very time intensive for me to do this, plus all the one-on-ones. I think we've already got like 20 people in it right now. So I don't have a whole ton of time for everybody. That's a good 40 one-on-one calls already that I have. So now you can see why it's going to be a one-time only. I will sell this course. So if now's not a good time, I will sell this course for $5,000 later. Okay. If you want to do this now with me, it's less than half that. It's going to be, I'm going to divide it into 4 monthly payments of $499 for you. And you can just sign up right here. So I think it's in the chat. Yep. The link's in the chat. Josh, we're able to get that in Facebook too, if anybody is watching on the live there. Yep. Cool. Thank you. So all you got to do is fill out your information there. If you've got a question on it, you can text me here. I will get this at the top. But that's what this live coaching experience is. It's going to be a one and done thing because this will just be a passive course. So you're going to get a hell of a lot by doing it now. And again, like a lot of us feel like we are on a hamster wheel and it's just, I got to get through this month. I got to get through this month, this quarter, this year, right? And we're just focused on the here and the now, but we are not planning a bigger, badder vision for ourselves. We're just focused on just the next revolution. And those of you who know my story, know I was caught in this for a long time. For years, I was just working in my gyms and it was really rough and I was just survival mode and I just couldn't get there. And you look for, there was a period of 2-3 years where with my first son, Maddox, the only photos we had together is me working in the gym because I was in there 60, 70, 80 hours a week. And all the photos are when my wife brought him to the gym. And then I got fed up. I'm like, I'm not fucking doing this anymore. I'm just done. I've got to get out of this hamster wheel. I've got to do bigger and better things. And it changed once I had that in my mindset, it changed everything. And again, this isn't a coaching experience based on theory, guys. Okay. I open it up and this is just real estate and infinite banking policies, but I show you my actual investments. I show you what they cash flow. I show you how it makes me money through amortization and appreciation and how it adds to my net worth. Now, this is just showing the infinite banking policies in real estate that you see, but you see passively, I make over 300 grand from just that without doing anything. That only took me 5 years to get all that done. Now I went aggressive on it, of course, but we're going to pop that open. Now, this is excluding the businesses that I own, the gyms that I own, the acquisitions that I've done, but I am not a theory guy. I'm just going to show you. I'm also going to tell you about all the horrible mistakes that I have made as well, so you don't make them too. I've lost a lot of money on stuff, a lot of money. I don't want you losing 100 grand on investment. Okay, done that. It's embarrassing, but I want to make sure you don't. But the important thing is I need you to see how the decisions you make over the next 5 years are going to affect you down the road. I know between just those investments that when I'm 65, I'm going to have 750 grand a year in tax-free income coming to me, or most of it, some of it's tax-free, some of it, depending on how we do it, will be taxable, but everything in the infinite banking policies will not be taxable. And then just the net worth of the infinite banking real estate is going to be over $15 million here, right? So I'm going to show you actual things. I'm not claiming to be 100 millionaire here, okay? But I do know for certain I'm going to be a decamillionaire. And I know I'm going to get past $100 million net worth too. This is not including businesses and all the work I had to do over the next couple decades, right? There's no reason you can't do this too. You just got to learn what to do and you got to actively do it. Knowledge plus action. That's it. So that's what I want. I want to take you guys along with me where I've been, avoid making the same mistakes. I want you to break free that hamster wheel. I want you to break free that hamster wheel. I want you to actively pursue the life you want to live and go for it. Yeah, it's going to require some time and sacrifice, but man, is it well worth it? Is it well worth it? So this is, like I said, where am I at? This is going to be offered just once right here. We start next week. If you can't make the kickoff call, it's fine. Everything's recorded. It's going directly into the course. You guys are going to get lifetime access for it. So even if you're really busy, you're okay. The great thing I love about Q4 is things wind down. November, December, we got Thanksgiving, we got Christmas, we got New Year's. It's a little bit less busy on the business side of things. This is where you get ahead. There's less work in the business. This is where you work on the business. This is where you work on your big personal financial goals, your big vision, and pull ahead in Q4. So pull ahead in Q4. But yeah, that's the link down there. It's in the chat. You guys have that. If you guys have questions on it, like I said, on that landing page, there's my number. Just text me. It's not a big deal. But we're going to start, and it's 4 monthly payments of $499. So I couldn't do it any cheaper for you. Again, the course will sell for $5 grand, but you get that for a lifetime and all the tool sets and the one-on-ones with me. Does that sound fair, guys? Cool. All right. That's all I have for you today. So remember, on the taxes, you've got to do, if you're buying a vehicle, right, and doing that, that transaction has to take place 2024. If you're doing the Augusta rule, that money transfer and everything has to take place this year. Okay, so those are the two ones that are really important. Your HSA, if you do that too, you might be able to do a little bit retroactive in 2025, but I would get that done this year and establish that account, and take advantage of that. Those are the really relevant ones that you have. Some of you need to be taxed as an S corp, so contact your accountant about this. All of your tax strategy, take to your tax professional, because there's a lot of questions individually, but it's all how it appears for you in your situation with everything and how it works together. Some stuff you want to save the depreciation for future years. Just depends really on your personal situation. But that's what I have for you today. I got a good few minutes that you guys can stay on too. So if you guys have questions, I'm here. I got a good 20 minutes, and unmute yourself, throw it in the chat, and I'll take some questions.
Scott, I got a thing that you might want to look into where you can put this class on this platform and you can translate it in different languages.
Oh, nice.
So we need to talk about that. And then also I've got another question. Do you know about the credit card $5.5 billion settlement?
Oh, yes, I do. And I'm glad you brought that up, because all of us have merchant processors, right? So there was a big, go ahead.
It can be anything that you whatever credit cards, however you accepted credit cards.
Yep.
So yeah.
Yep.
So if you don't mind, can I put the link in the chat for people to?
Oh yeah, go for it. Go for it. So what Shirley's talking about, guys, is there's a big lawsuit over if you're a merchant, right? You accept credit cards, which is literally everyone in this call. There's a big class action lawsuit. And do you know what the award was for it? How many billions?
Yeah, $5.5 billion was set aside. So if you owned a business between 2004 and 2019, you can apply for this. Even if that business is closed, you can still apply for it.
Yep. So basically the lawsuit says there was some price fixing by Visa, MasterCard, and all that. And they overcharged us all in interchange fees. And you can go to that website, enter in your information. They have really good records. So you put it in there, they will actually link and show how much you billed for credit cards. And then you can file that as a claim. And when this all gets settled, you're going to get a nice check. It looks to be pretty damn substantial too.
There was one lady, she had 3 gyms.
Mm-hmm.
She filed for all 3 gyms. She got back $130,000.
Yeah, it's substantial. And so there's the amount that is the claim, and how it eventually gets paid out, it'll figure out and settle. But it's likely going to be a lot, guys. Thank you, Shirley, for mentioning that. Because yeah, it's going to be substantial for everybody. So make sure that you go to that website, put in your information. I just found out about that last week and filed on it.
Yeah, and like I said, if you go through that link I sent you, your CPA, your accountant won't be overcharging you. They will do it. They take like a small percentage of what they finally give you, but you have to do nothing. You don't have to send them paperwork, nothing. They do it all.
Cool. Yep. And then if you Google it too, the official one from the attorney's office will kind of pop up as well. I don't have that link right on top of my hand, but either one will do. It should link up. Like it showed when I put in my stuff, it kind of showed how much was there, which is pretty cool. Super easy.
Yeah. And the whistleblower, he thought for sure Visa and MasterCard was taking out a hit on him, because I talked with him last weekend. So I know this is legit. I know all this. So, yep. And to share it, it's worth, filling out. I mean, if you get back $10,000, that's still money.
Oh yeah, absolutely. Absolutely. What else, guys? Anything else? Any questions that you have, whether it's on taxes, whether it is on the live coaching experience, anything. S
And this
corp
is gonna start next Tuesday?
next Tuesday. Yep.
I have a question about the S corp. Does that cost more? Because I know it's like $800 a year for LLC. What does it take to do the S corp? And like, do you have to, do more organization stuff, or how does that work?
Yeah. Or what state are you in?
California.
Okay. So yeah, California's, that's why LLCs cost a decent amount in California, right?
Yeah.
So S corps are a little bit more work on the accountant's end, slight bit more work on the accountant's end. But you don't have to, it's not like you're starting a new thing. It's not like you're starting up a new LLC. There's another $800. It's the same entity. You're just changing the way it's taxed. It's just like an election that your accountant will make. It adds a little bit of work onto their end, which is why some of them won't even mention it to you, right?
Okay.
So, but in states can be different, but I do not think there's an extra fee for it. It should just be like a little, hey, I'm being taxed this way now.
Okay.
Your
You switch
bookkeeper
back?
may charge a slight bit more, but probably not. I mean, everybody handles their billing differently, but I would definitely ask them, how, hey, is this the right move for me? And all that kind of stuff. I doubt it would be charged extra.
Okay.
And I don't think there's any fees from California, but they would definitely know the answer to that one.
All right. So I'll just check with him then.
Yep. But yeah, the whole idea is if let's say your total, taxable income is, 100 grand, but if you pay yourself 36 grand or 40 grand a year salary, say it's 40, right? And now that's 60% you're saving from being subjected to 15.3% Medicare and FICA.
Yeah, that sounds awesome.
Yeah. And it's
So-
it's that easy, right? And at that illustration example, 60,000 times 0.153 is $9,180. So absolutely take that to them, ask them about it, but you do not need a new entity to do it. One thing
Gotcha.
that's important, and this gets more complicated if you have multiple LLCs and you have holding companies like I do, an S corp can't hold another S corp. So like I have one master company that holds all my gyms and interests in other LLCs. And that one master company is taxed as an LLC. The other ones are just regular LLCs that pass through the income to that one. So I really maximize things. And that's how I have it with partnerships when at all possible, is that let's say I have an owner operator at a location. I own part of it. I have an operating partner that runs it. We each hold that with our holding companies. Because that way my partner can write off every damn thing possible, like their internet, their automobile, all that kind of stuff without screwing up the P&L. Because it's not fair. You know what I mean? So if we both hold it with our holding companies, he takes all the tax breaks. I take all the tax breaks. It doesn't mess with the LLC, the P&L statements, and get all messy like that. And the income from that LLC just passes through to our holding companies, and then we do it that way.
I have a mentor, and I think that's what he was telling me. He goes, now that you're buying this commercial property, he goes, create a Lumia Properties LLC, and kind of like the stuff that I think you were talking about.
Yeah.
So, which I'm just starting to understand a little bit. It's overwhelming, even what you're talking about, but I think, doing your course and just, hanging in there and learning as much as I can will help.
Exactly. And these are the things like, holy shit, because you might not apply that for a while till you get another business or you have a reason to do that. But like, then what you can do is do it the right way. Instead of another 4 years going by, you learn about it, you're like, oh man, I should have done it that way. You know what I mean? And so not everything is going to be 100. You're going to learn, you're going to apply all of it. Some of it is like, ooh, this is really good. And I'm going to use that a year from now or 2 years from now or 3 years from now. Right. And then that's why like all this is going to be the course for you too. So, but the things that you're going to learn, yeah, even now are going to be worth tens of thousands, over the long haul, hundreds of thousands, and more likely millions. So
Yeah.
it's a lot, but we just got to digest it over time. And then that's why I wanted to make this a live coaching experience too, because I could just record a bunch of videos and hand it off. But how many questions are you going to have on the nuances on that, on the details of that? Or, hey, my situation is like this, what should I do? And when you ask that question, 90% of the other people in that room are like, oh, I never thought of that question, but yeah, I need to know that, right? So we're going to be learning and doing it together, which is pretty invaluable. Good question. Great question. Anything else, guys?
Scott, so since I won't be able to do it next Tuesday, start with you on that certain day, so you're saying you're recording it, so I would be able to go back and watch that recording?
Yes. Yep, absolutely. So the recordings will be available for the most part the same day. As soon as we get it over, it takes a while for the video to process. It'll be uploaded and we'll have it there. So you're not going to miss a beat. Some of us have appointments and this and that, and we're not going to be able to make it live to every single one. Totally okay. The entire thing will be there. We're going to move just on pace. And again, everybody's going to get 2 one-on-one calls as well. So we'll really fine tune things. And the reason I'm doing that is, one, because it's a good thing to do. And I want to reward you guys for doing this with me. But also, like, I get to really learn the small details. If you haven't noticed, I actually care about like helping people and getting results and not just selling shit. Right.
I got that from you when I met you.
Yeah. Yeah. And when we get to spend that time, like, I get to know you, I get to know exactly what your struggles are, what you need to know more of, where you're at. And I get to learn, which will not just help me help you, but it's going to help me help everybody. Because I know, oh, you know what? You're the third person who asked that or had that thing. I need to then put that into the course. We're going to need to add that in there. So that's why I said, hey, I'm kind of tentatively bookmarking 16 weeks. Realistically, I see it going 20 at least, because I know we're going to fill in the gaps based on what you guys need to learn and the questions you guys have. So that's the reason for all of this stuff.
What time on Tuesdays?
It's 10 a.m. Pacific Standard Time. So 10
What
a.m.
time is it?
PST.
What time is it there now?
Noon.
So
Noon for me, then Central Standard Time would be noon.
yep, you'll be 2 hours different, so it'll be noon for you. Yep. And I try to do it in kind of those down hours in the middle of the day, and when people can kind of get away a little bit.
And you said you'd be having access to our bank accounts, or?
Nope, I'm not going to have access to your bank accounts. We're going to figure out and kind of really detail out, hey, where your cash flow is coming from, what kind of liabilities and debt payments do you have, right? And you are going to have all that. We're going to get everything in these financial tools to know where you're at, know where you need to be. Those are 100% confidential to you. If you want to share them with the group on a call or anything like that, awesome. Let's do it. On our one-on-ones, you don't have to share that with me if you don't want to, okay? But it would be good to do it, right? Because I deal with everybody. People, you didn't see my speech at the Growth Summit, Nancy, but like, I was hundreds of thousands of dollars in debt. I have no shame. I cast no judgment on everybody. I have made more mistakes, embarrassing mistakes.
I can top that, but.
Yeah. So all of this will be confidential to you. Share as much with me personally as you want to. The more you share with me, the more I can obviously help. So I encourage it, but it's not going to be open access for everybody, right? And I'm not going to get your routing and checking account numbers or anything like that, of course. So it's just I want to know where you're at to help you develop the plan. So you know where you're at, where you're going, your plan, your set, all that stuff. Yep. But I'm not going to get your bank logins or anything like that.
All right. Thank you.
You're welcome. All right, guys. Well, I really appreciate your guys' time and attention. And hopefully this was beneficial to you. Hopefully at the very least, you're going to save a lot of money on your taxes. We all have our work to do to bring stuff to our CPAs. Again, we're not really going to fully get to work on that until like February, March, April, right? But some of this stuff is relevant for planning now, today, that we have to do by the end of the year. So appreciate you guys coming on. You guys can always ask me questions. And yeah, we'll see you sometime soon. I think we're going to do another training inside of this group next week. So stay tuned. Look on social media. Look on your emails. We'll get out the notices to you. But appreciate you guys coming on. We'll talk soon.